Hello everyone and welcome back to my channel. So today's video is the second in our series of videos on stock market terms for beginners. And if you haven't seen the first one, which was on short, long, bear, and bull, I'll link that in the upper right corner of this video now. So today's video is going to be all about dividends and what is a dividend, what is a dividend yield, and what is a DRIP or a dividend reinvestment plan. So let's talk about that. Okay, so let's firstly talk about dividends and what they are. In essence, they are a payment that's made by a company to its shareholders out of its profits or its cash reserves. So these payments are generally made quarterly, but they can sometimes be paid biannually or even monthly. In order to get this payment, you need to own a stock by a specific date, which is referred to as an ex-dividend date, and I'll show kind of an example of that later in the video. The money will get deposited directly into your brokerage account. It's important to keep in mind that dividends can increase or decrease or be canceled altogether depending on the company's financial decisions. So just keep that in mind when you're investing in dividend stocks. Okay, so now that we know what a dividend is, let's talk about dividend yield. And essentially what it is it's the annual dividend payment expressed as a percentage of the current stock price. So in order to calculate that, what you would have to do is you would take the total dividend per share payment paid over the last year and divide it by the current stock price. So essentially, if the company is paying a quarterly dividend, you'd have to take the last 4 payments and then add them together and divide that by the current stock price, which would give you a dividend yield. This is often not necessary to do. You don't have to calculate it yourself because most financial websites will give you as a breakdown of the stock what the dividend yield is. I'll show on the screen right now a example of Apple stock which shows the dividend yield right on the front page. If you need that information, I'll put a link in the description down below directly to that page where you can search other stocks as well. Keep in mind that this dividend yield is going to change over time as the stock price changes. That directly affects what the yield is going to be. Also keep in mind that a company at any time could either increase or decrease that dividend payment, so that's going to affect what the yield is, of course. In order to know how reliable that dividend payment from a company is going to be, it's often very useful to look at a company's historical dividend payments. And I'll show on the screen now an example, again using Apple, of their dividend history. And often what you can do is if you look at how reliably they've paid it in the past, it's more likely, of course, that they're going to be reliably paying it in the future. And you can see whether it has been increasing over time or decreasing, which is often very useful when you're valuing dividend stocks. Also on the screen now you can see the ex-dividend date, which is the date that you need to have owned the stock by in order to receive that dividend payment, which is what we talked about a little bit earlier. Okay, so let's talk about what a dividend reinvestment or DRIP plan is. And essentially what it is it's a plan that's set up through your brokerage account that will automatically purchase additional shares of a dividend paying stock as long as the dividend payment was enough to purchase at least one more share of that stock. So why would you care about this and what advantages would it have? Well, the first advantage, of course, is that you won't forget to reinvest that money. You won't just be sitting there doing nothing when you've received that dividend. So that's the first benefit. But probably the most important benefit is that with most DRIP plans, you don't have to pay the trading fee to purchase that additional stock. So a lot of brokerages will charge $5, $6, up to $10 for every trade that you make. So with a DRIP plan, you don't have to pay that fee. So that obviously can be very advantageous for you. Okay, so hopefully now you understand what dividends are and know what the dividend yield and DRIP plans are. If this video did help you out, please consider giving it a like. It would really help the channel out. Also, please consider subscribing if you'd like to see more videos like this. And comment down below on terms that you'd like to see described in the future. Thank you very much. See you on the next video.